Started. Let's take a look at some stocks, options, futures, forex, cryptos. Let's see where the markets are at this morning. It is a big expiration day on August 19th. So before we get into the charts, let's get into the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks associated with trading. If you're following me out there on social media, make sure you're following the real me. Mondays and Fridays, 9 a.m. for the Pulver Report. We'll be live, taking a look at everything. If you're following me out there on Facebook, Instagram, Twitter, TikTok, follow the real me, real Chris Pulver. No crazy stuff, no solicitations, no scams. Report those clowns. All right, let's get into the charts. Happy Friday, everybody. How are we doing? Let's log into YouTube and see how everybody's doing. Say hi, say yes. Everything's coming through loud and clear. All right. Let's log in. There we go. Ruth Ann in the house. Wayne here. Gary, Denise, good morning. Chris, good morning. All right, nice to see everybody. Happy Friday. There we go. Okay, so I was just taking a look at the SPY this morning. We'll take a look at futures. Did we have some prints this morning out of the Eurozone? Friday retail sales for the U.S. When did this? I just saw everything this morning on Twitter, like Eurozone, German CPI, inflation. Maybe it was here. Wednesday's data out of the UK was higher than expected. Was there anything out of the Eurozone today, or is that like? I wouldn't imagine that Twitter is 2 days old, but maybe it is. Let's go to today. PPI out of Germany, retail sales out of the UK, public sector net borrowing. All right. That's it, I guess. But yeah, UK CPI inflation or CPI numbers from Wednesday higher than expected. So that's your headline CPI 0.3 higher, core CPI higher, and reflecting in currency strength this morning, dollar and Swiss. Interesting combination to see on top this morning. We have pound, yen, and New Zealand on the bottom. Strange alignments today. Volatility is fairly contained, but we've had a little breakout since 5 a.m. And we'll see what Friday looks like. Stock-wise, futures-wise, let's have a look. MarketWatch.com, take a look at the dashboard. Futures down. Dow Jones futures 0.59 to the red, S&P 0.79, NASDAQ 0.99. So things pointing down. Probably some heavy profit taking. There is a lot. I think I took a screenshot here on the expiration number. There are, hopefully I have a number here. Let's put this in perspective. Housing at an all-time low. Nope. All right. There's a lot of money up for grabs for the 8/19 expirations. So, leading bull and bear, market stall. Yeah, we could see that. All right. Let's have a little conversation like we did on Monday. Okay, Monday I said, look, if the market does this, how does that affect your trading? If the market does this, how does it affect your trading? So basically, if we go here, does that help? If we go here, does that help? If we go here, what are you going to do? Right? We're seeing cases on both. I mean, analysis I'm finding, reading, case in point would be, why would we go down? Same reasons we would down before. Nothing's really changed. Inflation's still super high, trending slightly lower with one data point, but yet it's not. Like we have one tick lower in the U.S. by 50 points or 50 basis points, and it's like, oh, peak inflation, everything's good, and the market rallies like crazy. Interesting factoid here. Take a look at this. So anytime that we've seen the market recover 50%, now I'll show you the measurement here in a moment. Anytime the market's been 50% on that recovery, it's never taken out the lows, which is interesting. So if you can read this, when half the bear was recovered, stocks never moved back to new lows. Ever. So this goes all the way back to 1956. It's a pretty good track record, right? Roughly 70 years. So make new lows after 50% recovered? No. Question mark for this year, because obviously the year's not over. And then you also see things like, oh, this looks a lot like 2008, right? If you line up 2008 to 2022, it's identical. I'll find that chart right here. Let's find it. Looking. Is that it? There's the 50%. So many pictures to go through. Come on now. Here it is. Right here. If you can see the white, I'll just kind of trace this. So the white line in the background is the current S&P 500 for 2022. So 2022 in white, 2008 in yellow, 2001 in orange, and 1937 in blue. So those alignments, obviously, those years might mean something, right? 2001, .com, 2008, financial crisis, 1937, pretty much the lost decade after the Great Depression. And this shows, oh boy, here we go, right? But we don't know. And so, again, this is what the market feels like. 50% say it's bullish, 50% say it's bearish. In a way, it would almost make sense that the market doesn't really go anywhere because there isn't really a winner. But on the upside, I could see the upside because there's still hesitation to sell. You have to remember that the stock market overall inherently has a bullish bias. So there could be some money on the sidelines. There could be this big FOMO trade where it just drifts higher. Another interesting opinion, going into this week and finishing out the year is that, this is a lot like the 2018 decline where we had 2017 was up, 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 up. 2018 shed about 20 to 25%, and then 2018's bottom in December, January to 2019 ended up making new highs. 2019 was a great year going into 2020. Obviously, we had our COVID crash in 2020 that shook the world up and screwed the markets up for a little bit, but then recovered. So again, it's going to be a really interesting second half of the year. I do remain cautiously bullish. I'm not cautious to the point of being on the sidelines. I'm invested. I am trying to buy assets that are distressed and on sale and good value, have good fundamentals. And in Forex, I'm trying to stay the course. A lot of my Forex trades are hedged, which means right now, long Aussie yen, long Euro yen, while I'm short Swiss yen and dollar yen. Not sure those are the right directions. They're both essentially in limbo right now. I'm looking for a dollar correction. We've talked about that a lot in the Flex trading room. Dollar index bar count, we're at 13,048. Looks like we are heading back up. But to what extent? I don't know. Is this a low to high, higher low to higher high? Is this a little channel here? Or is it easier for the dollar to make one more move? We've had 6 candles in a row. So really started last week, Friday. We had 6 moves. So 1, 2, 3, 4, 5, 6 candles in a row. Does it peak here with a slightly lower high and start to come back down as we wrap up the month in the next week and a half? So we have how many more weeks of trading? So we have 1 more full week of trading in August and then a half a week as we end the week on Wednesday the 31st. Summer trading kicks in. We should have a non-farm payroll on the 2nd. We have the FOMC rate decision on the 21st. The FOMC rate decision is right here, and we've seen it going back and forth. Now it's back to kind of 50-50. We saw, 70-30, 60-40, 55-45. It's interesting that now the market is showing a probability slightly higher to a 50 basis points hike as opposed to a 75 basis points hike. Again, does this really matter for September? Not necessarily. What will matter, truthfully, is, okay, if they surprise the market with a 1% hike, that's going to matter. If they surprise the market with a quarter basis points, 25 basis points hike, that will matter. But 50 to 75 is essentially baked in for September. This expectation for December is also priced in at 3.5 to 3.75. This hasn't changed for the last 30 days. So until, in the Flex Trading Room or on my YouTube channel, until we're talking about this, looking at these numbers for the CME Watch, the Fed Watch tool, if this December figure changes where this probability is extremely high to be a higher interest rate, that'll affect equities. If it's a lower interest rate expectation, that'll affect equities. But I think where we're at right now, this is where the market is already priced in the move. So I think if we stay here, the market will price in, or it's been priced in, and the market will continue to rally bullish. If it shifts where the expectation is slightly higher, if we start breaching 4% or above 4%, I think equities will struggle. If we go less, I mean, I guess the inflation data would have to really improve for the Fed to all of a sudden start looking at a lower expectation by the end of the year. But do I have a certain answer here? No. That's what's been so frustrating about 2022 is all eyes on the Fed. Everyone is kind of calling the Fed's bluff and saying they're going to pivot, they're going to start cutting rates. Maybe they don't, right? Maybe they just raise rates and then raise rates a little, raise rates a little, raise rates a little, and they're just really data dependent. But is inflation going from, 9% to 2%? Probably not. But the market might be excited to go from 9% to 6% because that trend is promising going into 2023. Okay. All right. Good stuff. Euro Swiss coal, yep, we'll take a look. Let's look at some currency pairs. So dollar index, look, bar counts. I'm watching the technicals. August is a nice transition. Let's see how we wrap up the month. I said this week in the flex room, if we're not going to make a move back down below this 50 EMA this week, then I am looking for a potential lower high. It'd be nice to see a little evening star, dark cloud, something bearish, and then start working its way back into the 200 EMA with that high bar count. But at the same token, if we have a high here, we have a high here, and somehow the dollar pushes slightly higher, the higher we push, I think the better that extreme looks for a correction. Now, again, I don't know the catalyst. That's the hardest part about this is I can, analyze this and say, look, this is what I see on the charts. But why, right? Why does the dollar do that? I don't know. Possibly a shift in the Fed's tone. Possibly a shift in the Fed's narrative. I really think the biggest catalyst right now is CPI data and the Fed. Those are the two biggest movers in equities and the two biggest movers in Forex right now. All right. So going into September, we'll see what happens. I've also said for the last couple of months, if we're going to see a rally in equities for the rest of the year, it's rare to see a rally in equities and also see a stronger dollar. So a rally in equities, I would think correlation-wise, we'd see a weaker dollar. Right now, that's not happening. Equities had a nice run in July. We've kind of stalled in August. Right, we had a nice, first week of August, but we've kind of stalled recently because we're at that kind of 50% mark. Maybe there's some resistance there. We might have some pullbacks and some gaps to fill. But for equities to continue a sustained rally, I think the dollar has to get weaker. Okay. All right. DXY, similar on the bar count situation. Not 6 candles in a row, but this one is 1, 2, 3, 4, 5. This is 5 out of 6 candles to the upside. And I will be watching this low. I'll be watching this high. I'm going to set a chart alarm right here. That is not where I wanted to set it. So chart alarm at the high. And chart alarm back to the lows. Around 104.66 lows. There we go. Let's go oil. Oil at 89.45. Pretty slow right now in oil. USO stalling. Pre-market's down to 73.10. Okay, where's the heat map from yesterday? Let's go to FinViz, see where things finished. Come on, man. Give me a heat map from yesterday. Really? All right, let's see where the week is at so far. So far the week, we've had a decently bullish week. Not huge, right? Fairly contained. Tesla's had a decent week. Walmart had a great week with positive earnings. If anybody bought those dips on Walmart, pretty solid move there. But anyway, I mean, we're holding primarily green. Healthcare, biotech, medicals, not so hot, but everything else pretty solid. Apple, 174. Google, Amazon, usual suspects. Microsoft, I did some trades on Oracle yesterday. So I'll ride those out a little bit with some staggered credit spreads. Let's go to Bitcoin really quickly, and we'll get into some FX pairs. Somebody made a request to me the other day. Can you show us more currencies? Sure. But I'm going to talk about everything. That's why we spend 30 to 40 minutes every Monday and Friday. We talk about everything. Okay. Morning, Leroy. Hey, Craig. Okay. So Bitcoin, pretty nasty move last night, isn't it? That's an ugly move on Bitcoin. And how long have I been talking about this channel? Certainly the last month. Once we had couple lows, connect the dots, channel here, and it's behaved, but that's a big drop to the downside to find that August pivot. So again, is this channel support going to hold? Do we see a slow and steady rally on Bitcoin? Or does this come back down, which I said was a threat, because we had flush, correction, flush, correction. So could this flush down? It's very possible. Not yet. Watching this carefully, but that is not a good looking candle. What I'd like to see over the weekend, because Bitcoin and cryptos trade 24/7, what I'd like to see over the weekend is if this candle has a wick for today, a wick to the south would be a good sign. Or over the weekend, we have to see possibly an indecision candle for Saturday and then a little bullish candle on Sunday. If we can at least see a bounce off that channel, that would keep me a little bit optimistic to see this correction play out until we hit 28 to 30K structure levels. Otherwise, if we have an aggressive move today and then a flag or more selling over the weekend, we might be coming back on Monday and seeing that, holy shnikes, Bitcoin is at 18,000 again, or Bitcoin's making some fresh lows. Okay, again, I say this, if Bitcoin drops like that, expect the dollar to be stronger, right? But if the dollar gets stronger and ends up peaking, I think that's where we put in a bottom in Bitcoin. There is a very strong correlation. We have at least a 10-year correlation between equities, the dollar, and Bitcoin right now. So we have to wait and see, right? So it will be an interesting weekend based on the price action I'm seeing here in Bitcoin. Ethereum also having a rough time, looking like we're breaking a trend line, coming back to find this weekly pivot. We have a monthly pivot around 1492 for the month of August. Okay, let's get into some currencies. First request is Euro Swiss. Euro Swiss trading at 96.27. I have symmetry at 96.30. It's been hit. I've been telling traders for a while, all I want to see Euro Swiss do is get on the right-hand side of the trend line. Right-hand side of the trend line, let's have a discussion. But more, just stay patient. Okay, from this area, I bought at 96.30. I have another trade at 95, 92.50, and 9,000. Those are on the left-hand side of the trend line if needed. I will say this, if we have a flash crash, not just throwing it out there, not to scare anybody, just more of a realistic approach to trading Forex because it happens sometimes with these super aggressive and strong rational trends. So let's say we have a flash crash. Well, if I have an entry at 95, there might not be any liquidity to get filled at 95. If I have an entry at 92.50, there may be no liquidity to get filled there. I might find myself with those pending orders getting filled at 9,000 or wherever the bottom of that flash crash is, and then the market reverses coming back to this pocket. So pending orders that are small and manageable are okay. In my newsletter this week, my top weekly pick was actually the Euro Swiss. See if my right here. Top weekly picks for this week, Euro Swiss was a little bit of an investment trade. So let's go here. So buy at 96.30, pending buy at 95, pending buy at 92.50, pending buy at 9,000. I'll put pending on these because these have not been filled. Pending, pending, pending. There we go. So these are all pending. But if these fill, if I have all four of these positions filled, my first price target is 103.50, and then 105, and then 106. And we'll assess from there. But again, all that has to happen on the right-hand side of the trend line. So as I look at Euro Swiss right now, not much has changed, right? Has this done anything? It doesn't take out the lows. We're not at fresh lows at 9,600 or below. Not yet. We'll see where today finishes. Okay, currency strength chart. Dollar Swiss on top, pound yen New Zealand on the bottom. It is what it is. Euro Aussie CAD in the middle. I did see the dollar CAD is one that I've been looking to trade and try to get a setup on. It's been a slippery little devil, but looking at something like this on the dollar CAD. If we can see the dollar CAD, something to this effect, a little bit of a channel. I am planning on this. If it comes up to these levels here, I'm looking to sell. If it comes down to these levels here, I'm looking to buy. So in the middle, I mean, if you were a seller, you had an opportunity to be profitable this week. If you're a buyer, you had an opportunity to be profitable this week. But you had to go both ways. It's in the middle. I don't want to trade it. It's going to be messy around this midpoint. So I would rather see if we can sell it nice and high, buy it nice and low, and in the middle, I stay out of it. So I'll just stay patient, letting the dollar CAD come to me, try to find a good trade. Dollar Swiss, Since Swiss is also strong, you know, the dollar Swiss is up. We bought this thing around 94.50, so it's up a little bit. Pip wise, is up like 100 pips or so, and I'm still going to remain long on you know, dollar Swiss. If we come back up to 9,900 or 1.00, I'll take some profit. If we consolidate a little bit more, then I will be looking for something like this. You know, maybe some corrections playing out in here, and then a bigger move to the upside with a falling wedge and stack that trade up. Okay. All right. Any other? I mean, we can just flip through some currencies. Not a lot has changed direction-wise. Analysis-wise, you know, Aussie CAD just waiting for a little pullback to push through. Aussie Swiss is going to be dipping a little bit further. That's fine. Aussie Yen, I'm hedged long in this one. So far, looking all right. Cad Swiss, I'm long on Cad Swiss. Just going to hang on to that. Cad Yen, pushing back to the upside, but looking to sell this one around 107.50 to 108.00. Let's take a look at New Zealand Yen. New Zealand Yen, if this comes back up towards 86.50 to 8700, I really do like the sell trade here. I'm going to put a box on this area here. And if we visit these equal highs, that would be a nice little sell spot right there on the New Zealand yen. Perfect storm pairs, sure. Well, like I said, off the top of my head, I mean, why? The reason I say that is I don't look at the pairs to be like, do I need to change something? Because the perfect storm just trades. So why don't I just look at my perfect storm and see how it's doing this week? Right? On the pairs that it trades, it's generated 384 pips this week. So do I care what the channel looks like? Do I care where the technicals are? Not really. I know what the robot does. It trades resistance, it trades support, and it goes after net pips. So, you know, the pairs that I'm trading, Aussie CAD, Aussie Swiss, Cad Swiss, New Zealand CAD, New Zealand Swiss, Aussie New Zealand, Euro Swiss, Euro Dollar, Euro CAD. I think we have 9 that we discussed this week. I just went back in an old Telegram message and found it. Like, it's the same 8 to 10 currency pairs I've traded for like 3 years. So it's still making some pips, right? So that's my perfect storm, grabbing 384 pips this week. My Pockets Pattern Pro, I have a reversion strategy that I love trading. I just check this one every week as well. It made 496 pips this week. So, I mean, this one just started trading not that long ago. This was April of this year. So 1, 2, 3, 4, 5. So 5 months of trading, and pip wise, generated pretty good chunk. We're up over 6,000 pips in the last 5 months. Full auto. You know, all I do is check the robot on Friday. So same currency pairs as Perfect Storm. In fact, actually, I take that back. This one has a little bit more. I just took away all the yen crosses. I don't trade yen crosses with this Pockets Pattern Pro, but I have it on everything else. So as far as efficiency goes, I will say this. Yes, it's nice to make 496 pips, but I'm also trading probably 8 more currency pairs. My Perfect Storm, I'm trading 8 to 10 currency pairs max, and I'm making 384 pips. So again, pick your poison. They're both really darn good robots. Makes it fun. Okay, so Peter, yeah, like that's my response. I'm not going to look at all the currency pairs when technically I know what the robot's supposed to do, which means I'm looking for currency pairs that don't like the trend, low volatility, highs and lows and efficiencies. That's what it trades, and that's why it makes pips. And I keep them on those currency pairs for that exact reason. Because if the Aussie CAD is going to trend, guess what's going to happen probably in the next 3 to 6 months? It's going to find a way to take back all that trend, right? So most of the time, the Aussie CAD doesn't like the trend, or if it does trend, it trends in a pretty efficient manner where the robot can still be buying lows and taking profit, selling highs and taking profit. I love those type of currency pairs with these robots. That's why they're deployed. And again, simple solution to automated trading. If you have a robot for your trading, if you're trading Forex and you trade with automation, you should know what your robot does. I cannot believe how many traders buy systems, buy robots because somebody told them it's a great robot, but they have no idea what it actually does. And they just cross their fingers and say, well, somebody told me it's a great robot. So look, I know that I'm trading with good robots, but I've been doing this live for 3 years. I've got the proof to show, like every week I check these robots and they do pretty well, right? But I also teach an entire class around everything the strategy has, everything the robot does from start to finish. So that way you know that if you look at a chart and you're like, oh, that one's in a drawdown. What's that mean? Well, there's education behind that. There's explanations behind that. There's ways to manage that. But I traded in a certain environment that is conducive for what the robot does. And that's why it's successful. If I traded this particular robot on every currency pair, it wouldn't have nearly the success because it is only as good as the environment that it trades. So if you have automation, you should know what that robot does best. Does it trade trends best? Does it trade ranges best? Does it dollar cost average best? How is its risk management? If you don't have those things nailed down and fully understood, that's why traders get so angry. Oh, my robot failed. That's stupid robot. It's not the robot, man. It's like don't set the robot up for failure. Give it a chance to succeed by putting it in the right environment. Okay? All right. So, nice little way to add up some pips this week, 384 and 496. Let me see if I have anything on my manual accounts. Anything this week? Zero this week. So I didn't close out anything manual. I'm just still sitting on some positions. All right, no big deal. Okay. Let's go dollar yen here for a second. Dollar yen. Dollar yen at 136.99. One thing I would look at for dollar yen, if we had this little swing below the 50, we still have a crazy high bar count. If this is a low, high, lower, high, or higher low to higher high, that potentially could be a pullback. If this is a high right here, and this is a low, this could be a potential Gartley pattern. I'm not sure if that's going to pop up. Let me check something here on harmonics. Do we have a dollar yen harmonic pattern? Daily, no. Weekly, no. Monthly, probably not. Maybe it's an 8-hour. Yep, right there. That should be a Gartley pattern. Does it have it labeled? Yep, Gartley pattern. So, I mean, this looks pretty typical. High to low, and then you have an A, B, C, D. Once that symmetry is completed, usually there's a resumption of this move because this is the larger swing. Okay, again, that could be totally wrong because the yen is a pain in the butt to trade for right now. But a high bar count, an August transition, getting into September, does the market slip at all? If the market slips, and actually we've seen, look, the equities market, this is crazy, right? If you look at the stock market, it went up in July, and look what happened in July. I mean, so at this point, like correlations don't necessarily have to line up. We saw this slide in the JPY in July, and we saw a rally in equities the entire month. So the truth of the matter is, could this go back down and have nothing to do with equities? Sure, maybe. It's a weird correlation because typically the JPY is a risk-off currency. But right now, it's just doing whatever it wants. So all I'm really sticking to on the JPY pairs is how many pivots we have, how many pockets we have, how imbalanced they are. And I'm looking to see, like, for the trading year, which Forex is kind of notorious for this, for the trading year, finding some type of balance. If the market started at a low and goes lower, typically it will fight back and maybe reverse, or we go from a midpoint, go to a high point for the year, come back and go to a low point for the year, and then finish somewhere in between. But there often is a lot of equilibrium in the Forex market. And we've seen a lot of this with no corrections. We've seen a lot of this with no corrections. So I'm wondering, for Forex specifically, do we have a correction? Do we have a correction? And to what extent? 38% retracement, 50% equilibrium, 38% retracement, 50% equilibrium. All are very possible. Technicals line up all over the place. But will we see a stupid trend line break in confirmation? Right? If we do, we trade it. If we don't, that's why I've scaled back my trade size. That's why I have free cash and margin ready to trade later. Okay? All right. So that's that. Any other Forex pairs? So chart alarm set up high, chart alarm set. I'm going to set another one down here at the lows. That's around 130.41. And we will keep an eye on this. So I'm telling you, August is usually a kind of dead month for trading. I mean, it's pretty lame in Forex as well, or pretty lame in equities. But we have big expiration today. Probably going to be some volatility in the equities market. And it has been since I'm just thinking like 2014, 2015, a lot of the August trading has been like low volume, drifts, where the market just kind of keeps trending higher, but we form these transitional tops and bottoms. Or if the market has been sideways, we start to see breakouts. So if you had a trend going into August, usually that trend kind of fades and we get a rebalancing going into end of August into September. Or if the market's been sideways going into August into September, we typically see breakouts one or the other. So August is actually a very important month seasonality wise. Dollar yen wise, are we still going to hit this bar count, which is ridiculously overbought? Are we going to go to a new high first and have divergence and then go straight down to that bar count? I've traded this bar count stuff way too long to be like, it doesn't work anymore. You know, it does work, but it's all about risk management and timing and patience. And it's not fun that way sometimes. Okay, gold and silver, sure. Gold trading at 1754. Look, if dollar's going to stay strong, silver and gold are going to weaken. If the dollar's going to be green for the day, if dollar's up, DXY US dollar's up, gold and silver will backpedal. Right? Now, is this a solid enough low to go low, high, higher low to higher high? If we see a turn in gold to the upside, we should see a turn in the dollar to the downside. That is a correlation that I would expect to play out. The reason we had this turn in gold was because we had a turn in the dollar. So I do expect that to stay pretty tight. Right? Could we come back to those lows again? Sure, we can come back to the lows just like we did here. Right? We had a low in gold, rallies up, pulls back again, finds the same low, and then rallies. So could we go from here, pull all the way back down the same low, but find support, hold support, and then go back up? Sure. All that can happen. Okay, so watch the dollar, watch gold. Silver's the same thing. XAG USD, same thing. Dollar strong, silver's been weak. Okay, cup and handle on gold, possibly. I mean, you can guesstimate, right? I mean, your cup and handle would be right here. There's your high. So because there's no left structure, sure, we have this low, we have this high. So here's what gold has to do. If gold turns in this area and we break this cup line or break this little neckline area, that move would be projected to measure a swing from right here. We have swing to there, and I would project a symmetrical move. So projecting a symmetry move and projecting a break of the cup line move. So if we have symmetry, that puts, and again, this is assuming that this is the near-term low from 1750 or so, that pushes gold up into 1870. We have our full cup and handle come to fruition and finish. That move is 1927. Okay, you can clearly see on gold as well, there is a lot of structure around the midpoint here. Lots of support and resistance, lots of bouncing areas off of 1830 to 1850. Okay, so I'm going to get rid of those pockets just in case. But what we could do, look, there's a potential cup and handle if we break this high. But I also would look for this. You know, we came right back down to the August pivot. If we start to bounce off of that, that would be a good sign for support on gold, a weaker dollar to turn. But if we end up drifting lower, I'd be looking for a double bottom. So that cup and handle pattern that starts this way could evolve into a double bottom, and that's still a good looking trade where we come back to center highs. If we break that, then we project it higher. Price patterns are awesome. You know, broadening formations, rising, falling wedges, double tops, double bottoms, crowns, head and shoulders, cup and handles, bear flags, bull flags. You learn how to trade those effectively in the markets with price action. They're pretty black and white. You know where you're right. Follow the profits. You know where you're wrong, have a break even. Most of them all set up with fantastic reward to risk setups. So, good stuff. Okay. All right. Any other currencies to take a look at? I have some expirations to discuss today at 10 o'clock with class at Equities on Demand. Lots of expirations today. A lot of them are covered calls. We're probably going to be adding additional covered calls for next week. So 8/19 expiration. Next week will be the 26th. And then we have the 2nd of September into a new month. So big expiration day for monthlies. There will be some volatility. Going back to the SPY really quickly, pre-market is, actually it's open now at 425. So we have a gap lower. So we gapped lower by about about 2/3 of 1% to the downside, but we are holding green. Again, day's not done, right? Amateurs open, pros close. What's the candle going to do for the day? It's interesting that we've had 1, 2, 3, 4, 5 bullish candles, and really only one of them has had the momentum to the upside. This candle was very bullish. The rest stayed bullish, but haven't really gone anywhere. So, again, the low volume pain trade would be, I'll call it, look, this is the FOMO trade right here. If the market continues to run higher, every retail trader is going to feel like I missed it. Every retail trader is going to be like, well, I guess it's a bull market now. My concern is that nobody gets a part of this run, and most people miss this run, and then it gets back to the highs, and that's when everyone starts to buy it, and the market goes up, scores a point, and then drops like crazy. Again, take a note on this. We might be heading into some type of broadening formation where the market, uses this low, uses this low, uses this high, possibly extends and uses this high. A broadening formation, right? So I'm going to do this on the SPX so it's a little bit less noisy since I don't have as much analysis on this one. Check this out. If we project right there, okay? Now, this might be like the craziest outlook to be like, there's no way the market can go that much higher. That's how these broadening formations are forecasted. If we have this stretch on the lows, you connect these highs. I mean, you just connect the dots, Pee Wee Herman style, and see what happens. The lows have been taken out, right? So I could probably shift this a little bit. There would be a low, and then you connect the dots up here. But I'm telling you, if the market is going to reach highs this year, we might have a little bit of I'm not going to say a euphoric run, but we could have a run that just catches people off guard. We're hitting new highs. And this could be to the chagrin of every bear out there that's like, there's no way that's possible. Market is forward thinking. So if the market has enough optimism to chew on, and it's not coming from consumers, but I'm saying the market's like, look, we priced in the Fed stuff, we priced in inflation, let's go. And give the market some relief. But all I'm doing is trying to propose that, look, it doesn't have to stop at these highs. This market, we've already had this. This is the high. This is the low. You look at that 50% level. That's why everyone's all excited that every time it's crossed that 50% threshold, it's never come back down to the lows. Well, okay, great. That's at least a sign to be bullish. At the same token, you look at this resistance and this resistance, you're like, well, does it make sense to sell off from there? Yeah, it does. Right? So we have to see. But if this market keeps going higher, just stop trying to short it. If the market's going higher, we're probably going back to the highs and we're probably extending a little bit higher. So don't short the market if we're going to see higher highs, right? If it's bulls, 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 by the time we get to, 4,400 on the SPX, go to 4,550 on the SPX, stop shorting it. The path of least resistance could be up, and it could be, what feels like a low participation bullish move, because everyone is so upset that, this is when everyone was reacting to inflation, when the market's already bottomed. And now, your average investor's like, I don't know what they think. This is when everyone's like, oh, the stock market's really down. So what do? They panic, they sell, and the market goes up. Right? So all I'm saying is, if we're going to see more of this, don't fight it. If we're going to see more of this, don't fight it. This is why we're hedged. This is why we're trading currencies and stocks and options. This is why we're watching charts all over the place. Something's going to give us, an answer. Some sector is going to stand out and be what we could trade, whether it's energy if oil bounces back up, or if we see energy, materials, and commodities continue to go lower, right? Maybe it's tech that recovers because tech was beat up so badly. The volatility index, is it really jumping up higher? 326. Hang on a second. Did I just get closed out? Look at this. I think I just closed out for break even on the old QQQ. All right. I'll take it. Maybe a few cents. What did I get there? Hang on a sec. I just had my trade close this morning. Let's see. 326, 326. I guess I'll check in my platform. I feel like I got a break even trade or better though. Oh, I rolled it. Oh, that's what happened. I rolled it. Son of a gun. I rolled it for a 5 cent credit. All right, we'll take a look at that at the top of the hour for equities on demand. If I rolled it, that's totally fine. Um, but again, I can still lose on the bear call spread. So anyway, 937. Wow, so up $937 from $90. That is awesome. Daniel killing it. Let's see here. Peter, all right. Leroy, fine. Good stuff on that Euro New Zealand. Any other questions? Nice to see some more people watching live. That's good. If you do me a favor, we got 70 plus people watching live for the session. Hit that thumbs up button for me real quick. Nimmer, what's up, dude? Pound CAD, sure. I'm gonna stay long pound CAD. Okay. If you want to, yeah, I mean pound CAD's not gonna change my outlook. I'm gonna buy this thing again around 52.50 and 5,000. Those are my two orders. What I'm looking for on pound CAD, daily time frame, are we in oversold territory? Not quite. Weekly, we're at oversold. I'm looking to see if we can get this move here. So my momentum oscillator is showing some nice divergence, which I like right here. So if we make a fresh low in price, I'm looking for that disagreement, possibly that slight hidden bullish divergence as well. Okay, but like I said, 52.50 to 5,000. If we bounce from there, I'm looking for a trade back to 6,000. Really quickly, I will rattle off some directions. Okay, thanks everybody. Yeah, keep hitting that thumbs up button for me. That's awesome. I'll give you some directions. I'm in about, I think 15 or 16 currency pairs right now with some exposure. Aussie CAD bullish, Aussie Swiss bullish, Aussie Yen bullish, Aussie New Zealand. I'm trying to sell it at 111.50. Not in yet, but trying to sell it. Aussie dollar, I have a swing trade around 67 that hasn't been filled. We took profit for 120 pips last week. Cad Swiss, I'm long. Cad Yen, I'm not in. Swiss Yen, I'm short. Swiss Yen is pushing back up to those highs like a real turd. Euro Aussie, not in. Euro Cad, I was long. I'm not in any longer. We took about 220 pips or 250 pips last week. Euro Swiss, I'm long for eternity pretty much. Euro Pound, no trade. Euro Yen, I am long as a hedge. Euro New Zealand, I'm not in. Euro dollar, I'm long, looking to see if we bounce off of parity with some divergence again. Pound Aussie, no trade. Pound CAD, I'm long. Pound Swiss, I'm long. Pound Yen, neutral, but I'm looking to sell it. We come back to highs. Highs around 167 to 168. I'm looking to sell the Pound Yen. Pound New Zealand, not in. Pound dollar, I'm long. I know it's back below 1.20. We might end up going down to these 2020 flash crash lows at 115. I'm leveled in for that. 120, 117.50, 1.15. I'm leveled in to look for a bounce on the pound US dollar. So I'm long with a position trade in mind. New Zealand CAD, I'm long. New Zealand Swiss, I'm long. We closed out. Actually, I'm not in New Zealand Swiss, but we may have been reloaded there at 59.30. Did we get filled yet? Oops, no, I don't want to do that. Ah, fudge. There. Did we get filled with our low today? Let me check. Low on the day is 29. So with the spread, we probably didn't get filled yet, but I have a pending buy at 59.30. New Zealand yen, I'm looking to sell it up in this little green zone that we talked about. New Zealand dollar, I am holding short term. I'm holding long. Dollar CAD, I'm waiting for a better setup. I'm going to try to sell it high around 32 to 32.50. Dollar Swiss, I'm long and looking to get this back to 99 to 1.00. Dollar yen, I'm holding short, and we're going to see if this correction plays out. So could be a high to low, that little Gartley pattern. If we hit a lower high and then start to trend, we'll see how that plays out. If I'm dead wrong on that and it's high to low and it just keeps going up higher, looking for a divergence and a correction back into the bar count. The whole frickin' bar count it's driving me crazy, but I've traded this for way too long with a lot of success to be like, doesn't work anymore. It does work. I just had to make sure that I wasn't overexposed and over leveraged. Okay. All right. Why would the dollar be stronger? I mean, I don't know. Right now, it's like the dollar stronger just because it's like the easiest flow. Path of least resistance. It's one of the more hawkish central banks. It's one of the safe haven banks as well. I mean, equities wise, if you look at the entire global equities market, 46% of it's in the U.S. markets alone. So there's an interesting like flee to safety for fixed income, but the reality is you're still losing to inflation. I think maybe the U.S. is probably a better spot to be than Europe right now as far as investments. So probably a safer spot to be than China right now. So I think the U.S. is getting a lot of flows. But like I said, risk appetite is interesting. Like to see the dollar get stronger while the equities markets are going up, that's usually not the correlation. So at some point, there's going to have to be a disconnect. I do not think that a sustainable trend is strong dollar and stronger equities. Okay. I think at some point, if equities are to continue to go, the dollar's going to have to weaken. Okay. And we have seen that. You can overlay, the S&P with the dollar index, and you can see that big stretches and runs in the equities market is a downtrend in the dollar index. So rarely do they run in the same direction. Okay. All right. So we'll keep an eye on this stuff. Remember, August is a really important transition month, and we're going to look to see if we can form some highs and lows, see some bar counts. September is not that far away, and I will be patient. In the interim, I'll let my robots keep knocking out some pips on those currency pairs that they're really good at trading. Fortunately, 500 pips right there. That's almost 900 pips this week, and I did nothing other than had my robots connected on a VPS and they traded for me. So thankfully, that let me put away some profits this week. Okay. All right, everybody. Thanks a lot for being here today. Equities on Demand students, I'll see you at the top of the hour at 10 a.m. We'll wrap up our session. We have a couple of expirations to discuss, whether they're covered calls, a couple of credit spreads, maybe some long puts. Oh, boy, $6 on him. Looks like I'm not going to lose it. Come on now. All right, $5.99. Looks like I continue to repair this one, which is fine. I'll just sell another $6 call. Okay. Thanks a lot for being here. If you didn't, please hit that thumbs up button for me before you go. And we'll be back on Monday next week, Monday and Friday, 9 a.m., youtube.com/Chris Pulver. Have a fantastic weekend. Happy trading, lots of profits. See you. Bye.